Hello, Maverick traders. Welcome out to your currency midweek for September 7th, 2022. Corey here with you as usual to do these midweeks, and let's have some fun. As a quick reminder, make sure you follow your trading plan and let's get to it. So, some interesting kind of aspects of the market. I'm going to draw up my outlook for equities. We talked a few weeks back about how equities were likely to go through a decline. I mentioned this to our stock and options group yesterday. I actually think we're going to advance from here a little bit. It's going to be kind of a rally for a week or two, followed by a failure, is kind of how I map it out. And I always call this, you can do this in any market, but it's kind of painting a picture. As you get more and more used to the markets, it's a good idea. You see this chart. Whoops, let me change my color. If you see some sort of chart pattern that's recognizable or whatnot, and you feel like you have a good feel for it, what are you expecting out of it? How do you think it's going to trade? Well, maybe I think it's going to be a little inverse cup and handle pattern, and this is going to rally here to create that little handle. And so you kind of stop the chart where it's at and you try to paint a picture of how you think it's going to trade in the future, where it's going to go. Okay, well, this is probably going to break down and consolidate, and you draw out this scenario. Or like in the markets right now, we've basically been in a bear market. We've been falling for the past few weeks, so we kind of have this sharper decline. And what I'm expecting, what I'm anticipating is a couple of different things. Number one, we're at the 61.8% retracement level, to use a fib level on the S&P 500 of the prior advance. So that's kind of the last fib line, the last line of defense, and it's a really interesting risk to reward. It also corresponds with the uptrend line from that advance. So there's multiple reasons for us to bounce here, but my expectation is that we bounce for a couple of weeks and then ultimately break that trend line and go to the downside. So I could map out my drawing. We're right here on the chart, but I'm expecting a couple of weeks rally and then ultimately a failure and a breakdown of the trend line. Anything that you chart, you can try to draw out that future expectation. Now, a lot of charts I'll pull up and I'll say, you know what, I have no idea. This looks a little better, but this looks a little worse. I'm going to move on. Oh, that one, I don't have a strong opinion. I'm going to move on. But you will run into a chart where you'll say, okay, I've seen this play out, and this fits perfectly because the US dollar should go down in this type of environment. Plus, we're at these corresponding levels of resistance, and it's also, it checks multiple boxes, right? It's not just one reason you're taking a trade. It checks multiple boxes, and then you can kind of say, well, I've seen how this plays out, and what normally will happen here is this and this. And so you can kind of paint that picture of what you think the future is going to look like. What I've found is that, again, while you won't get it perfect every time, the idea of perfection is just unachievable in the markets. I mean, there's just no way to predict and do everything perfectly. The good news is that you don't have to be profitable and to make a lot of money in this business. But if you can get the general outlooks right, if you can keep your stop losses out of harm's way, if you can manage your positions where you're risking little, and on the things that you're wrong about, you cut off that tail risk, you keep your losses small, and then you can grow those winners, this can be a very, very good business. And the more you can kind of paint the picture of expectation and get more of those outlooks right than wrong, that's trading profitably in a nutshell. Today, Apple is kicking off an event, also speaking to the markets, that is going to create some volatility. Apple is currently about 8% of some of the major indexes. It's a huge weighting in the NASDAQ 100. It's a huge weighting in the S&P 500. It's the largest market cap stock. So as such, there is a little truth to as Apple goes, so goes the market. But, if Apple goes sideways, the market could do anything it wants. It's going to be highly unlikely that Apple would plummet and the S&P would go up or vice versa. I'm not necessarily expecting much, but that's part of what could be volatile today and kind of drive markets. Commodity markets have rolled over. European energy prices had a big exhaustion top, and we touched on this. When you first create an exhaustion and you've gone parabolic, you'll probably dive violently and then consolidate, and that's starting to materialize here. Bitcoin and crypto in general is in a big, deep bear market and pretty much not all that exciting as far as an asset to trade. US ISM PMIs beat expectations at 56.9. And then the RBA and Bank of Canada, both on hold, kept rates unchanged this week at 2.35% in Australia, and in Canada, 3.25%. Now, as we look at the weekly performance, so far this week, the markets are bouncing back a little bit. But all of this gain, it's kind of, we're already to Wednesday, but we've only traded yesterday and today, right? Markets were closed on Monday for Labor Day. All of this weekly rally is from today, because yesterday we were down a bit. International markets flat, crypto kind of struggling this week, gold flat, and then oil also struggling and down. As we look at the weekly performance, not too much that kind of stands out in terms of these markets. Now, as you dive into the S&P, I said kind of painting that picture. Let me draw up a few different reasons for why I was saying I think we're going to rally here for a couple of weeks. I mentioned this yesterday to our stock and options group, and so far so good, I would say, on today's bounce back. If you were to draw a trend line here under these lows, it just so happens that we're right on that trend line there. If you were to draw a peak off of here, you could drag that trend line down here, and basically that's the pattern I think we're in, which is a symmetrical triangle. If you were to take from this low to this peak, right, that's the entire advance, and measure it out, there was a 38.2, a 50% retracement, and a 61.8% retracement. That's your Fibonacci zone. We're right at the 61.8% retracement there at 3,900 in the S&P 500. Again, multiple levels of support there. My personal expectation, if I had to draw this up, I would say, well, we'd probably rally for a couple of days, and then they try to hit the market again, and then it rallies a little further. And how high do we go up? A good guesstimate would be actually to flip your Fibonacci lines and say, okay, now we'll just see how much this bearish retracement is, from here down to here, and probably about a 38.2% retracement, somewhere around the bottom of this big, ugly red candle, somewhere in that general range is probably where this is going to fail again. We're in a sideways market. Look, the 20, the 50, whoops, I got them wrong. There's the 20, there's the 50, there's the 200 period moving average. They're all bunched together. They're all basically going sideways. 20 with a little downward slope, 50 with a little upward slope. It's just indecisive. It's a choppy environment. And this would really play out perfectly for that. So I do think we rally for a couple of weeks. And then what? My best guess is that ultimately we break this trend line and see some further selling into later on, another break to the downside. But things will go in phases. This is normal characteristics of asset prices. You can kind of think of it like any aspect of an auction, buying and selling. There's little plateaus and little things. You have to adjust to certain prices, and you have to get adjusted. If price goes down dramatically like it has the past couple of weeks, people will just be looking for an area to take profits on their bearish trades, to maybe buy and play for a bounce and so on. And at a certain point, the tide will turn a little bit in their favor, right? So yeah, we're going down, but buyers will regain control temporarily. Now it's going to be short-lived, but as we rebound back up here, those that shorted well back here and took profits well, there will be an interest in reshorting. Those that rode this market down, there's going to be an interest in them selling and taking those trades off. Not only those that bought well, but those that bought poorly will want to sell, right? And get their money out. And so this is kind of how the whole basis behind Fibonacci retracements is basically you'll kind of run out of steam in certain moves, and then there will be a retracement of your prior steps. And it's not a trend reversal. It's simply a retracing back of some of what you've gained. It's a resting period. So if something goes up, it's very common for it to kind of retrace back some of those steps and then go up again. It's a pause that refreshes the move. So that's kind of where we're at, I feel like, in the S&P. That's my painting of a picture. Try to get used to doing that. Pull up currency charts. Again, you'll say pass, 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 and then there will be one where you want to paint that picture and really test yourself and have an outlook and have an opinion. As I said, in the FX markets, a little more excitement this week, specifically in the yen. The yen broke some levels of support. It had stabilized for really a couple of months here. It had tried to rally. We talked about it, just didn't have it. I would have expected more out of it on the upside. And when something is as beaten down as the yen was, and it couldn't really muster much of an upside move, that's a warning sign. That's a terrible warning sign that you don't even have enough strength to kind of bounce back with any follow through whatsoever. And sure enough, the yen has now broken those levels of support. Where does this take us? That's a good question. We'll look at some of those yen charts, but very, very ugly price action. US dollar remains strong. This is a headwind for a lot of different assets. It's bad, when the US dollar skyrocketing for a lot of corporations, a lot of countries, a lot of commodities. I mean, it can be a headwind, so it's not ideal, I would say, for many different reasons. The Swiss franc strong, the euro strong, the pound, the CAD, I mean, all pretty much in that same almost 1%-ish type of upside. But the story this week is really that yen decline. Crypto, I would say it's grinding lower. It's not really, it doesn't have the same trend and momentum it had before, but it's still just, maybe there's just a lack of buying interest and a lack of risk taking and whatnot. Right now, it just continues to just kind of grind its way lower. And some of these lower quality, maybe you'd call them crypto, maybe more risky type of crypto, tend to have more volatility and swing more wildly to the upside and to the downside. So as we look at the markets, you'd still have to kind of maintain that we're in a bear market. I've tried to emphasize this point, even as we rallied here up to the 200-day or the 50-week moving average. My point was, hey, don't lose sight of the fact that we're still in a bear market. But this has been a nice rally. Now we roll over. From here, I think, again, we bounce at the lower trend line, that general area, for a time, and then ultimately make our way lower. But everything in due time. Everything has its time and its season, and right now we're still waiting for that next leg. So international markets, with the US dollar strong, if you tell me that the US dollar is going to go through a huge decline, if that was a strong opinion that you had, well, then I would say, okay, great. You'd want to buy international stocks. You'd want to buy CAD and Kiwi and Aussie and, almost anything against the US dollar. You can buy the euro against it or whatever, but especially those commodity currencies. if the US dollar was going to come off in dramatic fashion for an extended period of time. But let me say it just doesn't look that way. The chart of the US dollar is bullish on most time frames that you can look at it. So yeah, don't know what to make of international markets. As long as the US dollar's going up, they're going to probably continue to have their struggles. As I said, crypto is grinding lower. It's not trending violently or anything that way, but just kind of grinding its way to the downside. A little bit of a descending type of triangle or a low base or whatever you want to call it. It's sideways, it's boring, but it is definitely still progressing on the downside. Now, for the rest of this week, so tomorrow we've got the ECB meeting in the morning. And then, interestingly enough, later that afternoon, Fed Chair Powell, or right around that same time, I should say, not in the morning, but later on after the ECB, Fed Chair Powell speaks. And it's pretty darn close to the ECB meeting. Now, I'm not suggesting that Powell's going to say anything that's really going to change his current message, but it will be interesting to kind of look at those two potential. I mean, as far as this week is concerned, those are two of the big events this week, and they're right there around the same period of time. They'll probably ask Fed Chair Powell about the ECB meeting if the ECB were to make any major changes or anything that way. So it could be interesting to kind of see his viewpoint. Europe is struggling. They're struggling for multiple reasons, but one of those being the stronger U.S. dollar. And I think here, internationally, and even at the Fed, I think maybe they would like to see the dollar come off. That the speed and the manner in which it's going to the upside has to be a little bit disconcerting. Now, there's not a whole lot that they can do other than change policy. The amount of countries that have tried to influence their currency and peg it to other things and all of those things that they try to do are only a little band-aid that ultimately makes things worse. Anytime a country pegs their currency or is in there buying and selling and trying to move its price and so on, it is a recipe for ultimate disaster. So in the short term, they could cause the US dollar to go down short term, but in the long term, it would create more problems than it would solve. So I wouldn't expect anything like that to happen. On Friday morning, we get employment out of Canada. So let's go look at some charts together here and make sense of things. Okay, so a good question came in. What is the possibility that the euro gives one rate hike? So I think the Fed is going to hike rates. Now, the Fed meeting is not for a couple of weeks. What is it? It's 2 weeks from today. It's on the 21st. And I do think the Fed will hike by 75 basis points. The ECB meeting, expectations are that they're going to hike by about 75 basis points as well. There is the possibility they go the full 1%. I think in terms of Europe, they're in a tough spot because raising interest rates, I mean, Europe has an energy crisis, right? And raising interest rates and slowing they're already in recession. I mean, Europe has just got a tangled mess, basically. So they have two different aspects of it. They would like to keep inflation under control. They would like to drive energy prices down, but at the same time, they need to make sure that they don't fuel a bigger problem, and more rate hikes can further, slow things down and whatnot. So I think it makes sense for them to probably go by 75 basis points. If you are, they're a little behind the US. They haven't been hiking. Their rates are at a little bit lower level than we are here in the US. So they have some room. I mean, it wouldn't be dramatic. It wouldn't be catastrophic or anything like that if they went by a full 1%. But, I think the forecast is probably pretty good. If we come out to a couple of weeks away, Well, I could have done it a faster way, but let's just zip forward. The Fed meeting, they don't even have the forecast up here, but expectation for me is a full 75 basis point. Right now, the debate is, will the Fed hike by 50 or 75? I think it's going to be 75. And, I would be surprised if they don't. If you come in here, you can look at current rates, and that would take us from 2.5 to 3.25 here in the US, which would basically move us up to a tie with Canada, who did not change rates today, for highest rates here in the big 8 currencies. So anyway, I think that's kind of where we're at. But you see Europe way back here, and I think they'll go to 1.25. Good question. All right, let's look at a few different charts. So here, this is the daily. Let me go to the weekly. I mean, a really long-term chart of the US dollar. This will take you back to 2020. And of course, this spike up in the US dollar was COVID related. When the market goes to hell, US dollar screams higher. Okay, it's a safe haven. It's the biggest economy, the biggest military, et cetera, et cetera. It's where people go when they're freaked out. And so it spiked up. Well, they came in with guns blazing and started money printing and sending out checks and PPP loans and all these different things. And of course, the dollar kind of collapsed back down, recovered all the way back up. And that's where we kind of find ourselves right now, is up against that zone. Do we go, up and through immediately? Usually, when you come back to a big level like this, you'll at least respond. I mean, my thought would be that even if the dollar, which by the way is certainly in a bull market, even if it's going up and out from here over time, it should take some time in order to accomplish that. So I wonder if we kind of back off initially and then up and through. Now remember, this is not the US dollar index chart. This is actually just the dollar evenly weighted against all those currencies. If you look at it on the dollar index, which is primarily skewed versus the euro, it's already broken out. But I think this one's a little bit better just in terms of giving you a full range of the dollar versus all of the other currencies. Let's come back into the daily chart, and you can see a little reversal happening here where we're coming off of the highs. It looks like, I mean, we talk about long upper shadow candles are most often a little bit of a topping area. Long upper shadow. You see these long upper shadows at levels where you pull back, at least temporarily. So at minimum, we should pull back for a couple of days, and maybe worse than that, but that's the type of price action that this sort of candle gives, is that we're going to go through a little bit of a pullback. And remember, I just painted a picture for the S&P rallying. That really correlates, in my opinion, with the US dollar pulling back for a couple of weeks. Just a give back period of time. It's not a chart that you really can feel super confident shorting, because we're clearly going against the trend, right? The overall trend, like we said, it's in a bull market, but temporarily it is giving a suggestion that we've hit a high and that we should pull back for a couple of days. Now, on the flip side of that, the Japanese yen, which is the worst currency by far, we broke down, and it's been breaking down here for the past couple of days. And man, I don't know where you'd say the bottom should be in. I think you could kind of measure the size of this big trading range that it was in and make a measured move approach and kind of say, okay, that points to about 81. That would be the same size. So the size of this base as it breaks, probably about how far you're going to go that way, and then maybe bounce or what have you. But 81 is still a good bit lower than where we're trading at. It's probably where this thing is headed. It just is a runaway train to the downside. So yen looks really bad and still looks like it's more of a short than anything else. Swiss franc, one of the stronger currencies. If I had to buy something in the here and now, Swiss franc looks pretty darn good. You can kind of see the cup and handle type of aspect, or if you wanted to call it an ascending triangle. Either way, looks like we're starting to break out. So Swiss franc continues to look good, looks stronger than most. Euro has reversed in trend here a bit. Notice the reversal. Now, this is not just against the US dollar, this is against other currencies as well. I don't like to buy breakouts that go counter trend. So since this has been in this deep bear market, I won't buy the breakout, but I would buy it on dips. Definitely on the stronger side of things. British pound on the daily chart, still in a downtrend. A little bit of a bounce back the past couple of days. CAD working its way higher. Recent little breakout there attempting to happen. Don't love the price action today. Does run the risk that it is a false breakout, that ultimately we're failing to move to new highs and that we're going to come back in. As you start to come back in from false moves, this becomes a false breakout, come fast moves in the other direction. So if this is a false breakout to the upside, it might get ugly here quick in the CAD to the downside. So that one bears watching, no doubt. Last two, Aussie. I'm going to give this the benefit of the doubt. Still in a little uptrend here, but more than anything, it's in a sideways range. Yeah, it's been bouncing, higher highs, higher lows, but really it's sideways. I mean, that's not a real strong trend by any means. And then the Kiwi sideways as well, although this one more of a downward trend than anything. So again, not very exciting. So I think you kind of put Aussie and Kiwi, to me, just kind of look like they deserve to be in the penalty box. Until they really break out and decide which way they're going to go, just not a lot of interest for me to trade Aussie and Kiwi. That's my take. Okay, so just kind of ignoring them. CAD, if it has a false breakout, I'd be more bearish on it. Pound, I'm going to kind of put over here. I'm not super interested in pound. It kind of fits in that category. On the stronger side, euro and Swiss franc. Those European currencies actually seeing some reversal. And then obviously the defensives look more like they're kind of, yen obviously is trending down, and US dollar, again, kind of like CAD, coming off of the highs, leaving that long upper shadow. I think they're similar. So that's kind of my outlook. Here's my bearish candidates. Here's my most bullish candidates. And then these names, just not super interested in. So with that, I would kind of go in now and try to draw up scenarios of what I'm looking for. And you can mix and match these pairs, of course, however you want. For the first time in ages, euro might advance versus the US dollar. But again, specifically in the euro, it's been in such a downtrend, I think you got to buy the dips. I don't trust the breakouts, so let's go to euro USD or some euro chart. Let me pull it up here. Okay, now this is a 4-hour chart. Would I be buying on this type of break or acceleration to the, not really. Instead, I would say, okay, we're breaking out, or let's even come into a 1 hour. It might look a little cleaner. Okay, we're breaking out. We're trying to advance. Well, then I can buy the dip. So what might I do? Well, if you're into Fibonacci, once it starts to pull back, you'd say, okay, where's it pulling back to? Here's its regression levels, 38.2, 61.8, and so on. And you might try to buy the dip that comes back into that zone or something like that and play it to the upside. But the point being, that's kind of how I would look at that currency pair specifically. Is I wouldn't personally, I wouldn't buy the breakouts, but I'd try to buy the next dip would certainly be something that I'd be watching carefully. Because CAD has been stronger, again, I probably am not going to look to short the CAD on its current move, or the euro. So euro CAD could be an interesting pairing. Okay, reversing to the upside, and here's your daily, and it kind of had a plunge, and now it's starting to reverse. Okay, so we come into a shorter time frame like the 1 hour, and I might be interested. I am interested in maybe buying euro versus CAD for a trade. But where would I buy it? Probably closer to here, on a dip or something, and play the pullback versus trying to buy this breakout. The breakout's tough because you're going against the trends. The euro has been in a downtrend, the CAD has been in an uptrend, and you're trying to play this reversal. So I'd much prefer personally that dip buying opportunity. And I think it'll give those to you. The likelihood that these just run away from you is fairly small. The odds certainly favor that it will give you some opportunities. Just as, if you miss this breakdown or something back here, look at how it came back up, retraced some of that. You had an opportunity to short. Here, we've zoomed higher. It'll probably give you some opportunity to buy the dip down here at better levels, better risk to reward in that. So good stuff. Yeah, crypto. So let's take a look. The question was on Ethereum. Ethereum has been the best of the bunch, right? It's been better than most. Come into the daily chart. Unfortunately, the trend is down, on all of these, but even on Ethereum. 20 is crossed below the 50, little bit of downward slope. You'd either have to say this is either bearish, it's a downtrend signal, or at least it's a neutral signal, but it's not bullish. It's not bullish to be crossing downward. It's not bullish to have this 20 period moving average sloping down. It's not bullish to have the price action below all the moving averages and so on. It's at best neutral, and at worst it's bearish. So I don't think we can buy Ethereum based on these charts right here, right now. That would be my general thought. Now again, that's on the daily time frame. If you come into a shorter time period, you might see it a little different. In this case, you don't. That's still downward trending. That's still a downtrend even though it's bounced. You can see the downward sloping moving averages, the breakdown, and that this is just a retracement of the prior decline, right? So this is probably around that 38.2% retracement. This might be about a 50%. This might be about a 61.8. But anyway, this is where you would expect it to fail, is somewhere in this general zone, and then head back down. And it might be right here, right now. It might be right at that 38.2% retracement level. So that's how I would kind of think of it. Would you wait for some correction in yen pairs before going long? In terms of trading anything against the yen is probably a good rule of thumb, but you could, in the yen, you could take breakouts because it is working with the trend, and it is, it doesn't have that overhead supply or that under below support and such. So in the case of the yen, if you wanted to play the pylon game and kind of say, okay, even though it's gone up a lot, I think it's going to keep going. It is the path of least resistance, and certainly looks like, if you look at the yen with its massive decline, the charts are probably extended to the downside. As you can see, this 1 hour chart, we've been falling, but there's just no signs of stopping right now. So If I was going to do anything, I would, in fact, keep playing the yen to the downside or just kind of keep buying those things long against yen pairs. Where it should have had more was back in here. You know, this is where, and it did have a decent bounce, but, you know, I would have expected that somewhere back in here it would get a little bit more of a bottoming out shape to it and maybe advance for a, you know, a couple, I guess it bounced for a couple of weeks, but call it a couple of months. You know, I would have anticipated that we could go from this bottom of the range maybe as high as this top of the range. That wouldn't have been all that much given the context of how far the yen had come down and changes in markets and such, and it just couldn't do it. I mean, this was from false moves come fast moves. This is where it basically had a false move outside of the trading range. See how we had built a range here, bottoms and tops, and it tried to move outside of it. False move. What came next? A fast move. And this one has broken out of the range, but out of the bottom, and it's not false. I mean, this thing is intensifying. So that's why I say, if you want to continue to play that and continue to play that chart and pile on and such, probably makes sense to do so. So our schedule coming up, we've got a busy rest of the week. We're going to have relative strength video coming out on Thursday. Thursday morning, bright and early, we'll have the ECB meeting, which we will trade together. And then a reminder that Powell speaks, and his press conference is just after the ECB. So busy day on Thursday. We'll always send out our currency recap and then get out the currency trading room over the weekend. Hope you guys enjoyed the midweek this week. Have a great rest of your day, and we'll see you next time. Goodbye, everyone.